Welcome to Tech Society, a podcast about all facets of technology and our society. We deliver in-depth analysis from a technological perspective, giving you our take on things and interviewing people that are doing important things. Now, here's your hosts, Alex Dunmo and John Nguyen.
And before we get into the episode, do you have a great idea for a software platform or service that could make the world a better place? Then come see Ninja Software and be amazed by how ideas are transformed from prototypes to actual products.
Hey techies, today we have the opportunity to speak to Derek Gerrard, Director of Purpose Ventures and Entrepreneur in Residence at Better Labs Ventures, Perth's biggest venture capital fund. Derek is an accomplished entrepreneur, co-founder of GreenSense, and winner of several awards ranging from Business News' 40 Under 40, WAIDA's Achiever of the Year, and the Inside Awards. Derek is heavily involved in the +8 Startup Accelerator program and educating people on both sides of the deal. Derek shares with us today his insights on Perth's startup scene, getting funding, and connecting with venture capital. In this episode, you'll discover how to give yourself the best chance to receive investment from Better Labs, common mistakes in companies that are looking for venture funding, and what the venture capital scene is like in Perth and how we can grow it.
Hi guys, thanks for having me. I'm Derek Gerrard from Purpose Ventures. Joined, that was 3 years ago. So help the team kind of develop their process and kind of think about the right opportunities we should be chasing after. And then through that process, there became the opportunity to talk about not just the RAC team building their own companies that they 100% own of, but think about what if we put a fund on the side of that and then backed other startups as well. And so, again, I'm sure we'll unpack that a bit more, but that became the culmination of what's now Better Labs. Better Labs does two things. So we now incubate and commercialise our own businesses, which I'm still the entrepreneur in residence for. Yep. And then we've got the fund as well, Better Labs Ventures, which I'm the fund manager in that role. So doing that, then got involved with the +8 Accelerator. So I'm the entrepreneur in residence there. And then a bunch of other things. So I sit on the advisory board for Startup WA. I'm on the advisory council for Curtin University Business School. Chair a foundation called Meridian Global. And I can keep going and going, but it's a lot of stuff. So I do all of that in 3 days a week. And I also pastor a church, actually. So, So 3 days a week is my kind of commercial corporate life. And then a couple of days volunteering for our church. And Fridays off, and that's it. So
how on earth do you squeeze that all into 3 days?
That was my question. What does your typical week look like in those 3 days?
Yeah, well, I mean, it obviously, when you reel it off like that, it does sound like a lot, and I kind of spit up towards the end there a bit. But I think, to be honest, a lot of it's I'm working with great people. There's lots of teams around that. I have a very, very structured week. So for me, Mondays is my +8 role when that's running. So that's a program that runs for about 6 months of the year. So that's kind of Mondays carved out. Tuesdays and half of Wednesdays is carved out for Better Labs. Because that takes up a chunk of my time, and that's growing and going really well, so I need to put time there. And then all the other boards I'm involved in, typically, they're like an hour a month or half a day a month or something like that. So they kind of fit in on Wednesdays, occasionally Thursdays. Thursdays I carve out for my church day, and Fridays a day off, which I'm pretty religious about. Like, I think that's part of, for me, it's less about how am I managing the time, it's more about how am I managing my energy. And so Fridays for me, if I can have that I know every week I've got that as a day off, and have time with my wife and family. It's almost like that's the recharge to be able to kind of work at pace on the other days. So I get bored if I'm not doing too much anyway.
So I believe Better Labs technically is Perth's biggest venture capital fund, right?
Yeah, by virtue of the fact we're probably almost the only venture fund, but that's not entirely true.
That's exactly what I was going to lead to.
First and last.
Yeah, and look, and there's been venture funds. So there's been Stone Ridge and UI Capital, which are still operating in some form. It's just there's no more capital that's been added to those funds, and then there's a couple of other funds around like Upswell and 808 Ventures. And, in some ways, they're probably a little bit more a venture front of a family office than a traditional venture fund like we'd think about. And when you think venture, there's different forms of venture. So Better Labs is definitely a corporate venture fund. That means we've got one one investor, one backer, which is the RAC. So it's their fund and it's money that comes off their balance sheet. And that was the original toe in the water for them was a $3 million fund. And the concept was, hey, we could make 10 investments of $200,000 or $300,000 each and see how we go. And very shortly after, I think because we'd set up a really good governance process, we'd put in place an investment committee, and we were just seeing really interesting deal flow come through our application process. I think there was some confidence built in that pretty quickly. And so the result of that was to add another $20 million just over a year ago, which puts the fund at $23 million. And I think all things being equal, the intent would be to continue to look to grow that. So.
The internal side of Better Labs is quite interesting as well, right? I think a lot of people aren't actually aware of what that is. So from my understanding, the people who work in Better Labs actually come up with ideas in a way and try to commercialize them and build wholly owned companies the RAC that can be completely unrelated to anything. Not insurance or car insurance. Completely unrelated.
That's the intention. Yeah, and look, I think it would be worth. I can talk to that today. I think it could even be worth having James Edwards in, who's the CEO of Better Labs, just to kind of go through that journey because it's really interesting. But I guess in terms of what you're saying, the RAC is core business really is still roadside assistance and motor vehicle insurance. And there's some forward-thinking people there that realise with the change of that industry, who knows what that revenue makeup's going to look like in years to come. So if you think about it in one extent, I guess with autonomous vehicles, perhaps the insurance of a vehicle sits with the vehicle manufacturer rather than the driver, because if there's an accident, then it's the software's fault, not the driver, potentially. So, whether that happens in 10, 20, 30 years, I guess, who knows to some extent. But when RAC embarked on this innovation concept, it was thinking about, look, we might need to replace some significant revenue over time. And so what they did is they created what they call emerging innovation domains. And these are areas that are specifically not to be around insurance and mobility, to think about other things that it would make sense for them to have businesses in. So, for example, one is called clean tech. That's looking at the future of energy, water and waste opportunities. There's one called third age, looking at products and services for the ageing population. So we've got a range of investment themes that we can look at. And those themes are true both in terms of the internal stuff and the fund. So the internal team, I think it's like about 20 people now. We've developed an innovation sort of incubation process that we follow. So we keep very short time frames, and it's like a lot of testing. It's the whole, fail fast, fail cheap, or learn fast, learn cheap, perhaps is a better way to think about it. And so we have product managers and product partners, we call them. So it's like teams of two, almost co-founders. And they work through this process, look at ideas within the themes, they test it, they get in front of customers. Like before we're even building something, there's a lot of customer interaction, really checking that we've got a problem, that there's a market, that someone's prepared to pay to have that problem solved. And so they go through like this process that ultimately leads to potentially prototyping. We'll put a little bit more money in and keep testing, and then eventually, if it's made its way through that funnel, we'd commercialise the business. And at that point, we'd literally set up a new company that's a wholly owned subsidiary of Better Labs, flip that out as a proprietary limited business, and then that gets funding and kind of runs its own life. So
So how do you create that startup culture?
I feel incredibly fortunate that Better Labs has entrusted me to put that fund together. I mean, RAC is an incredible organisation. It's member based. It typically, if you do a brand assessment in Perth, it's typically number one, number two in terms of trusted brands.
Yeah, absolutely.
And so I think that's really important when you think about risk, and they understand that. And I think if you look at the size of the fund relative to the value of the company, obviously it's a small amount. But we've taken venture is all about a portfolio approach. So in some respects, it's understanding that, hey, we're not going to win on every investment that we make, but we're building a portfolio of 10, 20 plus companies, and we'd expect that one or two of those do really, really well to return capital. And it is definitely about, a venture style return that we're looking for. So you've got that element. The other part, I guess, is coming to the internal stuff. What we've learned over the few years we've been running this is that the best type of people to have are actually entrepreneurs.
Yeah.
So I think early on, hopefully this comes across the right way, but they were employee type people. So they're used to a 9 to 5 kind of job, and that's
stability.
That's great.
And
yeah, exactly. Yeah. And we still offer that, of course. But what we found is if we can find people that have had a crack at their own startup, whether it's succeeded or failed almost doesn't matter.
Yeah.
It's just that they then, the hustle just feels a bit different. Like the way I describe it is if you haven't had to lay awake at night stressing out, like you guys will know this feeling, like how do I pay the bills tomorrow, or how do I pay my staff, or how do I deal with that contract that's gone wrong? It just kind of adds this edge. So in fact, I think now all of the people in the team have had that type of experience.
Yeah.
So they're enjoying the benefit of the job stability, but in a place where they can still innovate and try things and be entrepreneurial. And I think that sort of helped with that risk profile as well.
You mentioned that it was they didn't start with that kind of personality, the hustle. But finding those kind of people in Perth, let's kind of look into the Perth's entrepreneurial culture. Are those people hard to find?
Yeah, and I also just want to add that the people that we had were amazing at the start. Like I don't want that to come across disrespectful.
No, it's just a different personality type, really.
A little bit, yeah.
Like I personally was an employee, a salaried employee for a while. Yeah. And I slowly developed that kind of entrepreneurial mindset. So I'm just curious about how you find these kind of people, and do they exist in Perth? Yeah,
for sure. So, they do. So we've got we've got 6 teams of 2 basically at the moment. So all of those 12 people will have run something. And yeah, but you're right, it is not necessarily easy to find. But I think what we noticed in our last round of recruitment, I think the Better Labs reputation is starting to build, and there's definitely a pool of people that we can lean on for that. We've had one guy that just actually came back from Hong Kong, and he was moving to Perth to be back with his family. So that was kind of interesting. And another guy that came over from Sydney. So I think there is also an element of our current environment where people are moving back to Perth. And,
definitely.
And so there's an opportunity there. But I also think through Better Labs and Plus 8 and other things I've done, I've probably looked at, in terms of Perth-based startups over the last couple of years, like literally thousands of them. I think there's probably more than people realise. Now, a lot of those might not succeed and might be short-lived, but they are people that have got some level of entrepreneurial spirit and wanting to try things. So I think the pool is probably larger than people might realise.
What do you say to people who, and I think I've probably said this, that there's no... or very difficult to find investment money for tech startups.
Yeah, okay.
in Perth.
Yeah, obviously. No, for sure. It's a constant dialogue, but to be honest, I think outside of a handful of cities in the world, it's probably more common than people realise. Often that's entrepreneurs who haven't found money kind of say there's no money in my city, but is that actually true? I'm not sure. I
think definitely money here. There's lots of money.
Exactly, and that's often what I'll talk about. I'm not sure where we sit now, but at one point, Perth definitely was pretty high on the number of millionaires per capita in terms of cities in the world.
I think a lot of them have come back too. So
so you got that dynamic. If you look at mining and even agriculture sectors, particularly mining in a listed environment, people are putting a lot of money into pretty high risk ventures from an exploration perspective. So what that says is, yes, we've got money, and yes, we've got a risk appetite. So I think when it comes to tech though, a couple of the issues are, one is that the funding is not that structured. So if you don't necessarily have a connection to a high net worth or a family office or an angel investor, it's like, where do you go? It's not that obvious.
Yeah.
And for Better Labs, that's been good in the early days. I always say we're like a big fish in a small pond, but that's not good for the ecosystem generally, because entrepreneurs need multiple options. That creates a bit of competitive tension. You also need other structured funding to create follow-on investment and support the kind of deals that we've done. So there definitely needs to be some maturing there. Anyway, so I think one part of that is the structure. I think the other part is education of investors. So again, the money's there, but they might understand what it looks like to put money into a public market that has liquidity for an exploration mining deal. Well, how does that translate to putting money into a startup that is not necessarily providing the same liquidity, but probably has, in my view, maybe shorter term milestones that you're reaching to create value within that business.
Yeah.
So there's some education there in how you do those deals. And look, there's some ridiculous benefits at the moment for early stage investment companies, true. Right? So in some ways it should be more attractive. And then I think the other end of that spectrum is just the continued continued communication, which obviously you guys are contributing to, but it's telling the stories of great tech businesses. So you need enough of those stories to bring confidence from an investor's perspective.
And that's actually what I was going to get to next. Is a lot of the stuff I read coming from the United States is the private investment generally doesn't actually come from a venture fund. It comes because a millionaire who probably started his own tech business stumbles upon some piece of software or technology or platform or product and says, wow, this is great, or this is going to be great. I want to give these guys my money. Or girls. And I don't think there's that in Perth. I think, as you said, there's all these startups, and I don't think we're aware.
Yeah, and I think, like, often, you talk about the different types of funding and the stages of funding. One of those fits in that family friends bucket, and there's an angel bucket. And I kind of say to people, like, an angel investor is your doctor or your lawyer or your dentist. These are people that are high net worths that could drop 20, 30, 50, 100, 200 grand. I mean, the first round of GreenSense was an angel investor that put $1 million into our business. So who just kind of liked what we're doing, and not a dissimilar story to what you're talking about. So, I think understanding that as a funding option is pretty important. And
that's an interesting one, because I think a lot of people don't know how to pitch their dentist.
Yeah, that's right. Yeah, and look, I think those types of investors, it's relational. They maybe they're not going to add the same value that a mature venture fund might add in terms of networks and deal structuring and follow on, but they're going to back you because they know you and they trust you, and that's a really important part of the early stages of your business in terms of the funding journey. So,
or I guess pitch their pasta as well.
Pitch their pasta, yeah. I try to avoid that. It's kind of unique. A pastor who's a venture capitalist, I'm not sure. I might be the only one in the world.
I'm sure there's one in America. It's got to be. So if you were looking for investment and you are, or you think you are venture capital ready or venture ready, how should you start? How should you get into it? What boxes should you tick?
Sure. Look, there's a bunch of things we could talk about. I mean, the first thing I would say is building the relationship is really important. So if you've come in cold, you've put an application form, we don't know you, we're going to just want to spend some time. So I think, kind of understanding what we're looking for, and maybe coming to one of our events and introducing yourself and that type of thing, that's just a good start point. In terms of, at a very practical level, what we're looking for, obviously it's within the investment themes that we've got. We have preference for seed investment Series A. We like to come in early because I think we can then help shape and add value. So this stage of the business is important. Obviously looking for what I would say is that product customer solution fit. So you need to be able to demonstrate through traction that you're solving a problem that a customer has, and they're prepared to pay you to solve that problem. Which we can talk a bit more about that, but some level of demonstration there is important. Defensibility is another piece that we look for. So we want to make sure that as you gain market share, you're thinking about how do you protect that against the incumbent solution providers or new competitors that come to market. But ultimately, if you ask me what's the most important thing, for us, it's the founder relationship. Yeah. So if I think about all the companies I've now dealt with over decades, when a company fails, for me, 98% of the time, it has something to do with the founder relationship or the directors or there's just something that goes on there. It's every company I've been asked to get involved in typically has had a director-shareholder kind of issue that we find ourselves resolving.
So when you say founder relationship, are you referring to relationships between the founders? With the fund itself?
Well, with the fund, I guess it's our relationship to them, but obviously their relationship as well. So I'll literally ask how long they've known each other for. I'm kind of trying to suss out, have they had some conflict and got through that, and how do they deal with that kind of stuff. But I think that relationship with the founders and knowing that the people we want to work with is the number one thing. So if we've got a list of probably 100 things we're going through, but if I could only pick one, it would be, are we prepared to back these people? And the way we think about that is this little model called, just the 3 C's, which stand for character, competency, and chemistry. I might add, I didn't make this up, I read this in a book. I've said it enough times, I'm not quoting the author anymore. And so look, what does that mean? So character, we're looking for people that we know we can trust, that they're honest, that they've got integrity, and people misinterpret that sometimes. Like what we're actually trying to get to the bottom of is that something's going to go wrong in the company, and that's just inevitable. And what we're wanting is people that are prepared to share that journey with us and come and say, hey, this just mucked up, I need your help. Yeah, and when it's not about trying to catch people out, it's actually about going, well, the sooner we know about this stuff, the sooner we might be able to get some collective intelligence of the people around the business and people we know and kind of solve that. So
that's a difficult one often, isn't it? Because there's a lot of ego in founders. And there has to be. I think to actually be a company founder, you need a bit of ego. But to have that self-awareness to admit your flaws
you need
and
the
weaknesses.
the humility and the ego.
Totally. And you're right. And that's exactly what we're looking for, to be honest. And it is hard for the entrepreneur because, you're trying to court an investor and impress them. And at the same time, I'm wanting to get to the bottom of all the, the ugly stuff. It's kind of... It's definitely a bit of a balancing act for them, I think.
It's funny though, because my business experience has been that identifying your weaknesses is basically your job as a founder, and replacing your weaknesses with people.
Yeah, great. I like that.
Yeah, because that's, like you said, that's what will sink you. But you should stop doing the things you're weak at.
Yeah, that's right. And get people around you and be okay having people that are smarter than you around the place for sure. Yeah. And look, we would go through a pretty robust due diligence process. So we're probably going to, hopefully, if that works, we'll find those things out. And it sure as heck is better if someone's kind of said, hey, there's a problem here, we've got a gap here, as opposed to us
stumbling upon it. Yeah.
And even worse case is we make an investment and then we find it. Like that is a very awkward situation to find yourself in. So it is in your interest to sort of be upfront. So that's kind of the character piece. The next one's competency. So look, we're not saying you've had to have built a startup before, but we want to know that you're good at what you've done. Maybe you've won a couple of awards. Maybe you had a career in the same industry that was successful. It's like, or hey, we've put an A-grade team together. We've filled our gaps, like you're saying. So understanding that you're good at what you do. One of the ways I think about that is I think the founding team of a business needs a mix of what I would say is the industry domain skills, commercial skills, and I'd say tech skills, but when I say that, it's like whatever your innovation is, like you need expertise in that area. And it's pretty rare that you'd find that in one person. There's occasional situations where that happens, but I think if it's a sole founder, we're looking to think how they've wrapped that skill set around them, or if not, it's a co-founder situation. And that's
Do you prefer a co-founder over a solo founder?
I know other investors would say they do, and I understand why. I wouldn't say I prefer one to the other. Like we've backed sole founders, and that's proven to be successful, and we've backed co-founders. I think there's pros and cons of each for sure. And then the third C is chemistry. So this is the idea that, hey, we're people that we want to hang out with, life's pretty short, and we will end up spending, probably a 5-10 year journey together. So you want to know that you're going to have a beer or a coffee together and enjoy that. But I think as well, the chemistry is as much about, it's like that energy in the room when you're together. You it's better than if you're on your own. There's something you're creating. There's something you're inspiring each other to become. I think that's kind of pretty important as well. And that's the kind of thing, like, to be honest, it's either there or it's not, isn't it? You know what that's like. So we're trying to look for that as well.
Cool. So when you mentioned like the competency and just running a business in the past and stuff, or just technical competency as well. I know that Better Labs has does a lot of work with SpaceCubed, I believe.
So we back the +8 program, and we the Better Labs team actually works out of SpaceCubed.
Yeah. So is there a lot of effort going into kind of education before they go through the whole VC process of just learning to become an entrepreneur?
Yeah, sure. And I guess in some extent the team at the moment is just really James Edwards and I, so we have limited capacity to do as much of that as that we would like. But I guess the way we've tried to structure that is by backing the +8 accelerator. I know you've had Brody on the podcast, so he's probably talked about that. But I guess when we looked at that, we thought, look, at the time and still to this date, +8's really the only funded accelerator. And when I say that, I mean they're funded, but where an entrepreneur can get a decent sized check as part of the program. So in +8, they get a minimum of $50,000 if they make it through to the funding round. From a Better Labs perspective, so I was actually the entrepreneur in residence in the Plus 8 program and then running the fund. And it just, as we were talking to the Better Labs team, it just seemed to make sense to try and create some alignment there. It meant for Better Labs it's almost, I guess, a good brand awareness that we're prepared to back startups and do that at that really early stage. So there is an element there. But also it meant that because of the connection we've got, we get to watch those entrepreneurs over 6 to 12 months. And in an ideal world, at the back end of that, we would look to invest in the better companies that came through that program. So what that actually means is, like, it's great due diligence for us. It's great due diligence for them to see if they want to work with us. But that program is all geared around accelerating their journey. So I'm involved in most of those sessions and inviting the masterclass speakers in.
This leads me into my next question, which is about discoverability. So it sounds like there's thousands of startups in Perth, and to be discovered, they have to be seen. And it sounds like there's like specific funnels throughout the city. Space Cube, Plus 8, being one of the main ones. As an entrepreneur looking to be found, is that the way to go? To just really immerse myself in the community?
That's a really good question, and I reckon I have two answers to that, right? So number one, because I love the startup ecosystem, I would say absolutely. Whether you come through, Curtin Accelerate or Curtin Ignition or there's like Plus 8, Space Cube's got some other kind of Sprint and Leap and other programs, and there's a bunch around, and there's others I should mention that are not coming to mind at the moment, and I apologise. But those, they're great pathways in, and I guess by doing that, you're on a journey. At the end of the day, the startup ecosystem is pretty small in Perth, so if you're prepared to get along to one of those those kind of things, or even just like the morning startups and other events that are around, you're gonna meet the people that you need to, and definitely that funnels you through. You can get known that way. So I think that, yes, that is a good pathway. And if you really feel like you need the help and the support, that's awesome. And one way or another, I think certainly from a Better Labs point of view, you would find us if you came through that pathway. So that's true. The other side, which is also a way I like, is that you have nothing to do with the startup ecosystem, and what you're actually doing is you're just out building an awesome business, right?
I was about to ask about stealth startups, actually.
Yeah. And I almost, in some ways, I like that, because you can, like, the startup industry of itself is actually quite attractive, and it's fun to hang out with all these entrepreneurs. And I know people that have done an accelerator and then another accelerator and another accelerator, or they've had one idea and killed that, and the next idea and killed that, and that's okay because you're learning, but it's like they've never actually gone on, and they're just circling around ideas, and they've never actually gone and built a business. And to be honest, if you want to contribute the best you can to the startup ecosystem, go and build an amazing tech company, grow it, exit, come back, and start investing and supporting entrepreneurs. Like, that's the best way to kind of support. So look, when I come across a company that's local that I actually hadn't heard of, and I get surprised by the traction, I actually love that.
That's cool.
When they don't even realize that they're a startup.
Yeah, that's right.
They just want to build. Because I think serial entrepreneurship can be quite addictive.
Yes.
It's like the most fun parts where you just kind of think about what you can do.
Yeah.
You talk to people about it.
Yeah, that's right. That's what I say. Like, ideas are cheap and easy. Execution's really hard. So that's why that traction piece is pretty important for investments we're looking to make.
If you see someone who's done 3 accelerators, is that kind of like a bit of a red flag?
Could be, yeah. If they're not, sometimes there's a journey of accelerators, like they could be complementary, or one might be, say, like hyper industry focused. And so if you're like, hey, the first accelerator was to kind of incorporate my business and think about testing the idea with customer, and I was getting support there. And then I went to another accelerator, which was about accessing US funding, and so I did that. And then there's another one which was industry. Then you probably could kind of get your head around that. If it was the same business in the same sort of stage and type, or they'd taken one idea and gone through 3 or 4 accelerators and never actually kicked anything beyond that, then there's probably a bit of a flag there, I reckon.
Yeah. With that, what are the most common mistakes you see, like when they finally bring their idea to you, or even they try to pitch you? Like, what are the big mistakes that you kind of go, oh, why do people keep doing this?
Yeah, that's a great question, and definitely through the accelerator and other places, I'm trying to think about how we help with that, because by the time we by the time we put a company into due diligence, we've already worked out that we like the founder, we like the business, we like the product, we like the track. Like there's enough to go, hey, we're going to put some time into this. And then more often than not, a deal won't happen, and it's got nothing to do with what the pitch deck would have demonstrated when they stand up in front of those competitions. You're like, wow, that's amazing. It's when you get sort of behind the scenes in the business, and it's what I would describe as business hygiene.
Yeah.
And it's not always a wrong thing, but what happens is by the time we're looking at a business, it might be that they've made some bad choices on the cap table in terms of investors or deals that they've done. They might have some terms in their shareholders agreement that they're not prepared to change that are fixed, and that means we can't invest. It might be they've put too much debt on the balance sheet in a wrong kind of form. So they're these
like
kind
directors' debt, that kind of stuff.
Yeah, that they want paid back. Like if they're saying, look, I put $100,000 in, and when you invest, I want that money back. Like, which you laugh, but that's kind of what happens, right? We won't do that kind of deal.
It's just paying their debt. That's not.
Yeah. It's like that's just part of playing the game in some ways. So it's what I would say is business hygiene. And often what happens, it's not that they made the wrong decision when they had to make that decision, but it's a number of those decisions over the first few years of the business. And by the time they're presenting to us, we're getting the aggregate view of that, and we have to assess it on merit at that point. Now, if we really, really like the company, we'll often say, look, these are the issues. You need to go and think about how you resolve them. We might even give them some strategies of how to do that. And kind of go, then it's up to you. I would say, I think we're up to about 15, 16 companies we've invested in. I'd say a third of those have had stuff that meant they weren't investable, that they've then gone away and resolved and then come back. And I love that, because that shows coachability of founders, shows they're listening. They really want us to be an investor in their business. And so sometimes what is some a non-investable thing can actually become the very thing that we like about the company, because you've solved those things. So and it's like, it could be corporate structure. There's all sorts of stuff that pops up in that kind of area. But the main reasons revolve around that sort of business hygiene area.
And that's hard for founders, because they're focused on doing business, not organising, structuring business. Right?
That's right. Yeah. And I do think, coming back to your earlier point, that's where the accelerator type environment is good. Should be good. Like they if they go in at the right stage, some of those things you can be cautioned against, or get the right people around to help.
So what are you most excited about that's going through Better Labs right now?
Oh, well, I don't want to pick one company or the other, because they all might listen, and then I'm going to have to face up to someone that I didn't mention. I guess what I can say is that, I think of the deals that we've done, I think I have to fully quantify this, but I'm pretty sure more than half the founders are female founders, which is awesome. Wow. We haven't done that deliberately in the sense of it's just fantastic. Been on merit. So really excited by that. And so that's good. I think just thinking through of those investments, there's only 3 that are not Perth based. So again, we're not only fixed on Perth, but that's our preference. So we can be backing Perth companies. So the fact that the bulk of our portfolio still fits in Perth, that's awesome. So really excited by that. And the other thing I'd say is the velocity of the deals that we're doing is increasing. So I think that's come about by both the maturity of our fund, but also just the general maturity of the startup ecosystem here. So literally in the last month, we closed 4 deals. Within those 4, 2 of them were follow-on investments out of the Plus 8 Accelerator last year that we supported the first time. And we've got a couple of term sheets out at the moment. So to see companies come through the accelerator and get money, for us, that was the first year, and that's worked, and that's really exciting. So obviously we're back in the program again this year. And just that number of deals that we've done recently, we're recruiting for an investment associate to come and help out in the team. So again, the velocity of deals that we're doing is increasing. So look, and there are some great companies. We have done a follow-on investment in one of those, Complete Home Filtration. Suzanne Dodd's worth speaking to on your podcast, by the way, but she's going really well. Like the tech's not software in some respects, but it's still innovation and high growth. So her money's now expanding that business nationally, and it's just going really, really well.
Fantastic.
She's a great founder. We're just doing another follow-on investment at the moment with one of the fintech companies we're involved in. We've just done our first US deal. So it's lots happening.
US deal? Well, in what sense? Like, as in you've got an actual
US company that we invested in.
Yeah, brilliant.
So look, our preference, by virtue of the RSC backing what we're doing. It's their money. It's member first. Tagline is for the better of WA. Like we're always thinking about that. Like, so if we're not investing in a Perth company, it's like, okay, is that for the benefit of Australia, and can that have a knock-on effect in WA? Or likewise, if we're investing in a US company, is there a way that can have a knock-on effect here? So definitely it's something we think about. But of course, we're also looking for returns, and we're looking for certain types of innovation and things.
The fund has to be successful to continue doing its good work, right?
Yeah, that's right. So we just closed our first US deal. And I must admit, US companies are, from here, hard to invest in just because the capital is so competitive there.
Yeah.
It means the valuations just literally on a comparative metric do not line up to what we can get access to in Australia. And I'm definitely someone that's trying to build Perth, like many people move back here. It's, where I want to live. And so, we want to kind of keep the money here if we can. But anyway, so we did invest in a company, which is a great company, I might add, a company called Waffle. They are some guys out of MIT. Waffle Insurance is so
a fintech.
Insurtech sort of company. So if you think about a lot of insurance products that you buy, you go to a different provider for each product that you want. So you go somewhere for auto, somewhere for house, somewhere for content, somewhere for pet. That's sort of the way you do it. And when you get asked questions, they are typically assessing risk based on the product that they're selling. So if it's car insurance, you're thinking about, have you had crashes before? Who else is driving the car? What kind of car have you got? The way Waffle have built their algorithms and pricing is to say, we're not going to insure the product, we're going to insure the person. So they kind of describe it as the insurance of you. So they'll offer, it's like a one-stop shop for all your insurance needs. And so you might get life insurance or pet insurance or travel insurance or contents or home or car, all these types of things. But every time they're asking you questions, they're building up your profile, which then changes the way they think about risk and pricing. And I in some ways you say that and you go, man, that's like really obvious. But
makes
it's just,
perfect sense.
Yeah, but it's just not the way the industry's kind of worked. So we're pretty excited by that. They're literally launching their product this month, so it's pretty exciting.
Oh, fantastic. Brilliant. All right, final question. We always ask this question.
Oh, should I? Really?
At the end of every episode, I don't know if you're familiar with UFC or wrestling.
Yes.
But the fighters, they have their song, right? Their intro song. So the lights go down, smoke machine starts, they come out, and the song starts. It plays that encapsulates their character and communicates it to the audience. So what is Derek Gerrard's intro song?
Oh no, I wish I'd thought about that. By virtue of the riff only, I like "Message in a Bottle" by Sting.
Nice.
Awesome.
Yeah. Great choice.
No other, no match to the lyrics, I don't think.
First thing that comes to mind.
So like the non-lyrical version then.
Yeah, that's right. Yeah, the instrumental.
Excellent. All right. Thank you so
Thanks,
much, Derek.
Thanks,
for your
guys.
time.
It was a real pleasure.
Appreciate it. Thank you.
You've made it to the end of another episode of Tech Society. Well, that was a great episode. I hope you enjoyed that as much as we enjoyed making it. Make sure you hit us up on Twitter @TechSociety, head over to the website, subscribe to the newsletter. And on this month in tech history, June 3, 1983, the science fiction film War Games is released. Notable for bringing the hacking phenomena to the attention of the American public, it ignites a media sensation regarding the hacker subculture. The film's NORAD set is the most expensive ever built at the time at a cost of $1 million. Not widely known is that the movie studio provided the film star, Matthew Broderick, with the arcade games Galaga and Galaxian so he could get first-hand experience before shooting the film's arcade scenes.